Markets Live, and happy Halloween to everybody. I am your host, Howard Greenberg. Big Beat Steve is away today taking care of some other Quasar Markets business, so it is just me solo today. Although I will be playing it in a little bit, probably around 9:45 or so, an interview with Dr. Alan Ellman, the president of the Blue Collar Investor. A great way to talk about it. He is a huge proponent and has a methodology all around using covered calls. And it's just fantastic, his whole plan. And we showed his first interview the other day. Now we have his second interview where he talks about how he approaches earning seasons when it comes to that. Well, let's get into the numbers here so far. If we look, QQQ is down about 7/10 of a point at 492.56. SPY down a little bit also here this morning on, better, not on less than stellar earnings reports by Meta and Microsoft. Neither one of them seem to have anything to set off any red flags. In fact, I've seen some analyst reports already this morning saying, buying the dip here is not a bad idea. So we'll see what happens, but a little malaise in the markets. And we were seeing that malaise, though, to be honest with you, even before we got into that exact, well, not really. We were moving up this morning before that 8:30 on the SPY, and at 8:30 when it came out. So we had two sets of numbers come out. We had the initial jobless claims. They fell by 12,000. So they came in at 216,000 this week, or the week ending October 26th. And it's the lowest claims we've seen since May. And it had been estimated that they would come in at around 230,000. So we had less jobless claims than we had thought. So market's not really taking a firm view of this one way or the other. One thing I didn't take a look at is how these numbers have moved. The Fed Watch, which we know is a device that helps you get a feel for what investors think is going to happen with the FOMC here. We're now just 7 days away from that, 7 days and 4 hours, and 94.6, almost exactly where it was yesterday. 94.7 when we left yesterday was that rate. So not much of a move there at all. So it doesn't seem to be moving that. Second set of important data this morning was the PCE, and inflation increased slightly in September and moved closer to the Fed Reserve's target, according to the Commerce Department's report that came out this morning. PCE showed a seasonally adjusted 0.2% increase for the month, with the 12-month inflation rate at 2.1, both in line with estimates that we had seen on the market. The Fed, we know, uses PCE reading as its primary inflation gauge, though policymakers do follow a variety of data indicators to make those decisions. And they had been targeting inflation at a 2% annual rate, a level it hadn't achieved since February of 2021. The September headline rate was down 0.2% from August. Though the headline number showed the central bank nearing its goals, the inflation rate was at 2.7, excluding food and energy, after the so-called core measure increased 0.3% on a monthly basis. The annual rate was 0.1 percentage point higher than forecast, but the same that we saw back in August. The move in inflation was tilted towards goods prices, which increased 0.3%. Services actually decreased 0.1%. It's the fourth outright deflation figure in that category, so it looks like services have started to move down. Housing prices did ease off their pace, rising just 0.3%, and energy, goods, and services fell 2%. The report comes with markets betting heavily that the Fed will cut its benchmark short-term borrowing rate when it meets next week. As we said, almost 95% feel that we're looking at a quarter basis or a 25 basis point move cut here. But policymakers have expressed confidence that inflation is headed back to its target. We know that they were more concerned about the jobs data. That's why I brought that up first. But again, it isn't really moving the needle all that much this morning. Let's start to get into a little bit of the earnings that we saw yesterday after close or this morning. Let's start off with Meta. Meta is down about 1.43% here. Is making a little bit of a recovery here this morning. It was down almost 4% earlier. So people, as I said, a lot of analysts are saying, hey, this isn't nearly as bad as people are taking it off. They did report better than expected earnings results, but their forecast rising infrastructure expenses next year, which caused its stock to fall after hours. And we can see what it did here in the after hours last night. It dropped, tremendously from about 599 down to a low of 563 or so before finding a little bit of support here this morning and moving back a bit. Facebook's parent company reported third quarter earnings per share of $6.03 on their EPS, which beat Wall Street's consensus estimate of $5.22. Revenue came in right at 40.6 billion, which was again above what analysts expected at 40.2. So again, part of the reason maybe that we're seeing that closure, people starting to put their heads around this a little bit better. They guided current quarter sales to a range of 45 to 48 billion. The 46.2 was the analyst estimate, so right in the middle there, so not too far off from that. Company also updated its full 2024 capital expenditures guidance to a range of 38 to 40 billion from prior range of 37 to 40, so raising the floor there but keeping the ceiling in about the same place. They did come off and say that they expect significant capital expenditure growth in 2025, adding it will have significant acceleration in infrastructure. A lot of this around AI again, and that's why analysts are saying, hey, they have to invest in this. This is what you need to do. Zuckerberg came out, the CEO, and said we had a good quarter driven by AI progress across our apps and business. We also see strong momentum with Meta AI, Llama adoption, and AI powered glasses. And we know on Monday, Wedbush analyst Scott Devitt reaffirmed his outperform rating on Meta stock and raised its stock price to 640, or his target. Right now, again, trading at 583. So, again, before this gets all the way back up there, Meta might be one, if you are interested, that you do buy the dip on this. Again, I will keep everybody on, watch here that we know Big Beat is still predicting that we do see some we still have some headwinds in front of us, and we could look for a 10 to 20% pullback, and we've seen other analysts talk of that. So it is important to keep that in mind. But if you do think that we still have the legs to carry on, and again, I saw some articles today talking about the fact that it's not really the election that we're going to see a run up all the way to the inauguration. So I thought that was a little interesting. Another one of the major Mag 7 that reported yesterday was Microsoft. They were down 4%, not really recovering as well here. Still down about 3.87% here this morning. And they forecast again a little bit of a slowdown in its Azure cloud business. And it said, as Microsoft anticipates a sequential increase in capital spending, again, also like Meta, they're spending on their AI. Evercore ICI analysts highlighted a few companies that stand to gain from this. So this was an article I was looking at that came out after earnings, and is talking about how we're going to get into how Microsoft talked a lot about their capital expenditures and how they're going up. Also, who would be the beneficiary of these? So two to take a look at are Arista and Vertiv. So we're going to take a look at those here today. Arista Networks, which is ANET. So one to keep an eye on here. And they pointed out that Arista, for one, gets 45% of sales from Microsoft and Meta alone. So with both of them talking about raising capital expenditures, Arista, one to keep an eye on. Again, ANET. is what I'm taking a look at there. The second one was Vertiv. Let's go. And Vertiv, what did I have that here? Vertiv gets 40% of its revenue from this area. So again, to take a look at, Microsoft's management team did feel good about how the company will benefit financially from AI as the technology evolves. CEO Satya Nadella said. He said the company is present in the right spots. In his view, a huge adverse selection problem today where people it's just a bunch of tech companies still using VC money to buy a bunch of GPUs. He said on his earning calls, referring to venture capital and graphics processing units, but Microsoft is not even participating in most of that because we are literally going to the real demand, which is in the enterprise space or our own products like GitHub Copilot. Again, their AI M365 Copilot, which is, of course, their business software. Following Microsoft's quarterly earnings report, their CFO, Amy Hood, said they expect the company to take a 1.5 billion hit also in income in the current period, mainly because of an expected loss from OpenAI. They've invested close to 14 billion in OpenAI, whose ChatGPT assistant has gone viral and inspired a whole new industry of generative AI, as we know. So again, I take away sort of the same way with Meta, that while this is down, this might be one that I take a look at here today to maybe dabble in here. We'll see. But these two, especially if either of them takes a big drop here after open, I would definitely take a look at that. Another big miss was Roku. Their stock had fallen 14%, now down actually 15.25. They posted another quarterly loss and a flat average revenue per user. Their third quarter loss was 9.03 million or 6 cents a share. It was better than what they posted a year earlier, and the FactSet consensus was actually for a loss of 32 cents, so they beat expectations. They did say the number of streaming households rose 13% to 85.5 million, and the number of streaming hours was up 20%, but that the average revenue per user was still flat at $41.10. They said we look forward and we remain focused on growing platform revenue, the company said in a statement. Key initiatives include innovating its home screen to expand monetization, growing ad demand through deeper third-party platform integrations, and growing Roku's build subscriptions, according to the statement. They did say they're now expecting fourth quarter revenue of 1.14 billion, which is a little bit ahead of what Wall Street estimates were, and it's expecting its fourth quarter loss to come to 65 million, just ahead of the 64 million loss, again expected by the street. It started to say, Roku said that starting with the first quarter of 2025, it will no longer offer quarterly updates on streaming households and average revenue per user. The company's key performance metrics will instead be streaming hours, platform revenue, adjusted EBITDA, and or earnings, and they remain committed to growing all these metrics over time. I will point out stocks down about 15% year to date. Let's get to the positive ones here. Man, this was a stock that was left for dead. Um, you know, back here in the end of last year, really. Carvana. I mean, look at that move up. We talked about Carvana yesterday with Agnieszka Wood on our trading mindset, one that she's been in for a while, and was talking about should she pull some profit off. Hopefully she didn't, as it is up 12% here in pre-market hours. It was up as much as 20%, so you can see it is taking a little bit of a hit here this morning. Basically since about 8 a.m. But the online car dealer delivered a huge earnings beat. Investors obviously appear happy as the shares are jumping. They announced third quarter earnings before interest, tax, depreciation, and amortization, or EBITDA, of 429 million from sales of 3.7 billion, which was above the 330 million expected and 3.5 billion top line from the street. Carvana smashed expectations, beating estimates by 30%. Guidance appears solid also. For the fourth quarter, the company expects a sequential increase in year-over-year growth rate for retail units. And they expect, again, that full-year EBITDA to be on the high end of the prior range of $1 billion to 1.2 billion. So Wall Street's currently predicting that 1.2 as it is. Carvana sold 108,000 cars in the quarter, up 34% year over year. So again, another one, and Carvana up 291% already year to date. So one to keep an eye on here. Man, at some point, we'll see a reversal there. That's one that, I don't know. We'll see. Next on the lineup was an app that I actually use a little bit, Robinhood. Robinhood down about 9% now, so it has picked up a little bit this morning, as you can see. So some of these that got hit overnight, as investors are taking a better look at what their earnings reports or analyst calls have to say, are coming back and jumping back in. So again, that's picked up about 2% this morning. After dropping, like I said, after being down almost 11% last night. And it said, despite pulling in more revenue over its past 3 quarters than it had in any other full year, the online brokerage saw its shares slide and extended trading Wednesday after its third quarter earnings. They reported a relatively muted quarter-over-quarter performance amid 2 major pushes launched by the company this year. Earlier this year, Robinhood unveiled several promotions with the intention of pulling more customers into its paid Robinhood Gold subscription services. The promotion included a physical gold credit card, retirement account matching, and a 1% deposit boost. They helped pull customers from other brokerages to Robinhood and contributed to the company's strong 2024 growth. However, the momentum from those promotions may be starting to slow down. On its third quarter earnings call, their CFO, Jason Warnick, said the company was ending its 1% deposit boost for gold customers. The 1% gold deposit boost has not driven as much incremental customer activity as other promotions, so we've decided to wind it down in November to focus on offers that resonate more with customers. Warnick said during the call, again, I take that as sort of a positive. They're actually listening to what the market is saying and, making a decision based on that. So I don't think that's bad. I actually also am interested. I just got approval for their new trading software that looks more like what TOS offers. So we'll see what that looks like. I haven't played with it yet. I just noticed that this week. I believe it's called Legend. So we'll see that. I did say on top of that, Robinhood announced a handful of new products in October. It hosted its Hood Summit in Miami. For its most active customers, where it unveiled its new futures trading features and advanced web-based trading platform, Robinhood Legend, like I said. Then earlier this week, it announced it was rolling out event contracts to let people bet on the election. We'll see how that has. They did announce adjusted earnings per share of 17 cents per share and 637 million in revenue. It did fall below the estimates of 18 cents per share and 661 that were on Wall Street. And like I said, it was down as much as 12%, now only down 8.29. And prior to the third quarter report, shares of Robinhood, were up 121% year to date. So again, what you start to see with some of these, sort of the same boat that we see Meta and Microsoft in, is when you are at near all-time highs and, rocking and rolling, even something that is in general a decent earnings report can make you move down fairly tremendously. So again, for you dip buyers, Robinhood might be a play here on a buy the dip move. Another one that's hurting here this morning, although bouncing back again. So similar to what we saw with Robinhood, is eBay. eBay was down as much as 10% in, post-market trading last night. You can see it drop down here all the way to 49.65, now back up to 59. So a nice bounce up there. And there they actually, the reason for some of this weakness was that their full year revenue guidance came in a little light. The company estimated revenue of about 10.23 to 10.29 billion, where the street was looking for a little higher at 10.32. That weakness comes in large part from the expected fourth quarter revenue, which they are looking to be below estimates there. Third quarter numbers uniformly beat the estimates, however, only by a hair. Revenue came in at 2.58 billion versus an estimate of 2.55 billion, and EPS was a 1 penny beat, $1.19 a share versus an estimate of $1.18. Gross merchandise volume, which measures the value of goods sold, came in at 18.3 billion. Again, a slight beat over 18.1. The company expects fourth quarter earnings in the range of $1.17 to $1.22. So right about the same level it's at now, to maybe a little bit higher. Analysts were looking on the high end to that 122. So again, one where they haven't really moved the bottom end of their estimates, but they're lowering the high end of their estimates. So we will see what's going on. Again, another one. This was up 44% on the year before yesterday's earnings. So keep on looking here. Let's take a look back here at the major indices and see if we have any movement here. QQQ still down about 0.7 of a point. And again, this one's been fairly flat since we got to the 8 o'clock hour. Not much of a movement here after the economic data came out. We do see a little bit of a drop down since economic data on the SPY. Tick slightly negative to start off with. Bitcoin holding up barely at 72 here. I will say yesterday I did hit it pretty much right on the head. This is my daily chart that I was showing yesterday. I was looking for a measured move to match this drop from the previous high that we had seen here back down to the low of last Wednesday. We basically did make that 2-for-1 move up. Came in right at that 73,000 level, and then moved back down. Did not break our all-time high, but we got real close there. I am looking for a pullback here, probably towards that 70,500 points here. That would be a healthy retracement before we start to move back up. We are right at a fib level, though, where we could see a bounce here today from this level. So I'd be watching this 71,750 area today. So 71,750 would sort of be the area to take a look at. We spend too much time below that, we could come back to test some of this former, resistance as support. The key level here, I stay bullish as long as we stay above 69. 250 or so. So again, I am bullish on Bitcoin as long as we are above 69.2. So that's what I'm looking at here. Gold, again, we know set a new all-time high. I thought it broke through the 2,800 level. I had seen some places reports of a breakthrough 2,800 here on the CFD on gold. It shows it at 2790. Has again retraced a little bit here. Silver back down below that 34 mark, unable to break through that 35. Again, I will point out Big Beat has been all over silver. He did lower and sold some recently in this range here, in that 31 to 33 range. He has mentioned he would be a buyer if it breaks above that 35, and we actually narrowed it down a little bit more to 35.48 or so. Any break above that, he's looking for a move towards 50. So I do want to keep that in mind. We do see WTI has been moving back up here. It bottomed out at about 67 this week, and we see it now back above 69, trying to get back above that 70 handle. So that's what we see there on the major indices. Let's take a look. I hadn't pulled up really my pre-market movers here, so let's take a look at that. Don't save. Come on over. Let's see what we find here in these pre-market pumpers this morning. First one I'm seeing is Root. R-O-O-T. Oh, this is a breakaway. Here you go. R-O-O-T here is definitely one to keep an eye on. R-O-O-T. Look at this one for a run. It's got moves. It probably has movement all the way up to about, I'm looking at that 46 level. It's at 40 right now. 40.18. This one, very interesting here. Let's see if we pull up the hourly and we can see a trigger point where we'd want to jump in. Tough. Okay. So it's at 80 right now. 86 would be the next set of resistance I'd be looking at here. So this one could be in play. Root definitely want to keep an eye on here this morning. Let's take a look at AMX. AMIX, excuse me, AMIX. This is trying to make a move right now. AMIX is one that's been in play a few times here. So this is definitely, you know, what I call a perennial pumper here. Does it try to make a move back up? You can see what it's done on this daily chart. Over the last couple of days. I would say, though, this is one of those diminishing returns a lot of times, in that, you know, it's still down on the daily chart. So here I'd want to see a clear break above that 1784 that I had pointed out on a different chart here. Oh, that's still the daily chart. I'm like, why does that not look right? Let's see what we got here. You can see VWAP's knocked it down twice. So any break above VWAP here at 1605, this would be in play. Let me get this down to that 1605 level. Actually, it looks a little higher. I would want it above that. So I want it to break VWAP, and then I want it to break above where it rejected here these two earlier times at that 1652 level. So that's what I'm looking at here. I'll put it up on the screen. I'm going to put it on the hourly so it stays here a little bit longer to see it. So what I'd be looking at here is breakthrough VWAP. Then break above 1652. Look for move up to 22. So this one, I'm going to set an alert here. So I've got it up on the screen. I want to see if it crosses up through, I said 1652. So I'm going to give myself a warning here at 1625, and we'll see what happens. Okay, so AMIX, folks, well, that's one we're going to keep an eye on here this morning. We are 1 minute away from start. Let's see if we can find another one we're going to take a look at here. LUXH. And when they retrace that far, it's a little tougher. This one's been rejected. If it does break through VWAP, would be interesting. So Lux Urban, we'll set a quick alert here. See if that one breaks through VWAP here this morning. Okay, so we've got that set up, AMIX. We are open. Let's take a look at what we got here. LUXH, any of these start pumping, we want to be on them pretty quick. Let's get to what we're at here. Tick opens up minus 400 here. Tick minus 400. QQQ looks like it's going to go down about 1% here to start off our day. So we are seeing a negative start here in the day to start off with. Trying to get a bounce back here. 491.62. Bitcoin just broke below. We're seeing everything drop down. So very similar to what we saw to start the day yesterday. Seeing a similar start here this morning. Or excuse me, not yesterday, but Monday. Today is Thursday, right? So that was actually Tuesday. Let's see what we've got here. Let's see what's happening with the ones that just came off. Microsoft continuing to drop down now down about 4.37. It did get a bounce. It had dropped all the way down to 411. Looks like it's going to challenge it here again. Man, I know my man Steve would be in on some of these for a bounce. Tough for me to do it today with us in the middle of me trying to do this solo. So a little hard to do some trading today, not gonna lie. I won't be jumping in on anything here on the air most likely unless I see an amazing type of setup come from one of the pumpers. In fact, let me pull that up there. And you can see 411. I'd be looking to see Steve. If I was him, I'd be at this 411 looking for a bounce up from this level. Meta down now, down 2 points here, so it's dropping back down. What's happening with the ones that were nice beats? Carvana took a little bit of a drop, now bouncing back up. Looks like it still wants to run. So let's see if some of these early morning ones, again, this would be one I'd be watching here. Any kind of break over 245. I think it runs here. So Carvana definitely in play. Keep an eye there. Roblox, another one, now up 16.25%. We know how much this got beat up after Heidelberg's report. Obviously today now moving back up close to the high of 52-week high now. So it definitely looks like Heidelberg. Oh, we just hit the alert here on LUX. Let's take a look at that. Come on. How do I get to it? Why is it not going? LUXH, LUXH. Oh, I don't see where it broke through that level. I think it lied to me. Oh, this is the one I had for VWAP. Okay, okay. It touched it, rejected again. So you can see VWAP right now is strong resistance. If it does get past that VWAP here, this one is interesting. So I have these set to keep on going off if they go through VWAP just only once per bar. So we'll see what happens here. What's going on with AMIX here? It's still trying. It got through VWAP. It's trying here. So these are trying to run. We could get one of them here. You can see still, and again, you can see exactly what I said in this last bar here at 9:30. It went right up to that 1652 area, came right back. So again, as you can see, these are pretty, they do hold true pretty well. Okay, it's making a run here again. Here it goes, 1625. It makes a run through there. You could get a play on this right here. They are both trying to make a move here. Not able to make it on either so far. Switch my screen over to our pumpers here. See what's moving first thing this morning. Biggest movers so far this morning, EVGN. Let's take a look at this. EVGN. I don't know how it got that figured out, but getting another alert here. Let's take a look. AMIX trying again. So it's getting through VWAP, but unable to break that 1652, as you can see. If we see some volume, I will point out the B4 indicator showing two straight buys here. That's usually a pretty good symbol. MACD, you can see, just crossed over, which is why you see the green on the bullish divergence here. Trend, you can see, obviously, it has been moving up, so it's there. Not set for a squeeze alert yet. Hasn't seen a big influx of volume. That's what it's looking at for here for that. It's a good indicator, good community script. But you can see rejected right at that same level here. So that's starting to become really strong resistance here. Break above that. And if we can flip that to support, would be huge, right? That's what we look for here. We can see LUX8 seems to be falling away. It doesn't fall out of our mindset here for a while. We'll still keep it in play, but one that seems to be falling a little bit further away than we would like from that. Not seeing AMX go up yet. Let's get back to the Wargla watch list here. Meta making a nice move up though. Meta now only down 0.6 of a point. Again, this was down 4 or 5% here. You can see it made that big move down to 560, even 562 area, now back at 588. So Meta people, as they digest the analyst call, definitely like what they're seeing there. On the other side, Microsoft, not so much. Microsoft does look like it's finally catching a little bit of a bid here. Again, that's what I said. I liked it when it re-hit that 410, 411 area. But definitely still not really positive here. Not looking positive before they're giving you sell signals, successive sell signals. It is trying to move up. Like to see a run here myself from Microsoft today. As it's trying to move back up, let's take a look and see what's going on with the tick here. Tick is negative about 302. The ADD sitting at a negative 396 right now. So again, the advanced decline line negative of about 393. Got that alert going off again. What do we got? Which one's trying to make a run? It isn't LUXA. It's got to be AMIX here. Oh, it quickly made a run up, but unable to do it. So again, this one's trying. This is what you want to see. If we can get that move through, you got to play here. Let's see what happens. Rejected though pretty hard. What that usually, now we got to look for it to break the 1711, unfortunately. Yeah, I'd still go above 1752 again, but that's me. I'm a little bit more aggressive with some of these. Let's see what we're seeing for stop so far. FLWS on the stop. I haven't heard that one in a while. That, of course, is 1-800 Flowers. FLWS. If I spell it right, it's going to come up. Stop to the downside. Stop to the downside. They just had earnings, but someone doesn't like what they're hearing there. I also see JCSE is a stop. JCSE got halted here. Another one stopped to the downside. So most of these stops so far have been to the downside, not to the upside. Not seeing much there so far. Root is the big jumper this morning. It is still running. Root still running here. Doesn't look like either of the two we were looking at are going to make a run here. So let's see if anything's coming across here that we want to see. Take a look at our streamer. Not really seeing any real pumpers here. Let's take the volume out of it, see what we get. That might help us a little bit. I had volume in there for another gauge here on that, but it doesn't seem to be helping, taking too many things out of there. So let's take a look here. Yeah, nothing too exciting so far here. Let's put this to my. Let's see what's going on here. In the S&P. So biggest mover so far, Paycom. Paycom, biggest mover so far today on the S&P. And we can see, look at that nice move up here today. Paycom up 20% here today. Nice move up by Paycom Software. Did see they got Piper Sandler is maintained a neutral rating, but moved their target up from 191 versus from 160, trading at 205, so blowing through that estimate. Tick coming, trying to go positive here, only down about 35 right now. VIX is up to 21.22. QQQ again down about 1.22, 1.25%, continuing to see a drop here. So we haven't quite seen the floor here. It looked like we found one earlier at that, support level near 491, but now have broken below that, continuing to fall to the downside here. Again, this is something that Steve's been warning everybody about. Expect some downside volatility here. Let's see what the winners are so far. DJT back at 42.69, so it does look like that one's back in play today, up about 6.67% after the huge fall it took over the last 2 days. Had dropped, hit a high of 54 before falling back down to 39 on Tuesday and Wednesday. Looks like they're trying to get a run on it here today. Merck is up 1.23. I do have some notes here on their earnings. Let's pull that up. So they reported a mixed quarter update. They cut guidance even as their earnings topped market expectations. And we do see them now up about 1.23%. They've been down about 18% after their last earnings report here. You can see, they had made a run up towards that 575 level before dropping all the way down to 464, now regaining the 500 mark. They did say falling demand in China for the company's blockbuster human papillomavirus vaccine, Gardasil, has poked holes in what was once seemed like a rock-solid plan to grow through the expiration of the cancer drug Keytruda's patent in 2028. Nothing in Thursday's report appeared to meaningfully reassure investors, and shares were flat in trading. Their third quarter sales were 16.7 billion, a little above consensus of 16.5, and their EPS was 1.57, above the 1.48 estimated. The company did lower its non-GAAP earnings guidance. They also said the new guidance reflected a negative impact of 24 cents a share related to two business development deals. Sales of Gardasil were again a disappointment. The company reported 2.3 billion in Gardasil sales in the quarter, down 11% from the same quarter last year. Analysts had expected sales of 2.5 billion. So keep in mind that the stock fell 9.8% in a single day after the company flagged weakening demand in China. The company on Thursday said that drop was due to the lower demand in China. So just as they had said, AMIX just got stopped. Did that get stopped on the way up? Let's see what we had here. AMIX, the one that we were watching. Not sure on that one. It says it was stopped, but does not look that way. Oh yeah, 1405. Okay. Stop to the downside there, AMIX. That's sort of out of play. Not really, but it's rough here. Definitely did not break through what we needed to see there. Tick back down 305. QQQ now down 1.41. Still now 489. So 491 had seemed like a support zone. Fell below that. I don't see another support zone here to 488.35. So still seeing weakness, weakness, weakness. And again, if we look, Meta now down 2.72. Wow. So Meta had made that nice jump up and then just boom. Not sure what happened there, but after making a run up to, 590, now just a big drop to 575. Wow, not sure what just led to that. We know that Meta and Microsoft here both weighing on the market tremendously. Now Microsoft down more than 5%, Roku down 18.78, Robinhood now back down to 12.44%. So we are seeing these ones that are getting hit here get hit pretty hard. Let's see what else we have going on. I don't think it's tough to predict that we're looking at a down day in general. Sirius down at 3.5%. I do want to point out we do have coming up later today, after close, we still do have some important earnings led by Amazon. Give you the wrong answers here. Amazon, Apple, Intel, Atlassian, and ICF International after closings. Seeing some beats here moving up. Peloton now up 19.7%. So, and I do have their notes here. So it says Peloton is back to generating free cash flow and is edging within reach of profitability as they connected fitness company reins in costs and looks to improve the unit economics behind its hardware. It said Thursday. Despite the progress, Peloton is expected to lose more members and sell fewer bikes and treadmills than analysts had expected during its all-important holiday quarter. Still, the stock was up 10%, and as I said, now up 19.17%. So people are happy with the announcement, I guess, of their new CEO. And then, as you can see, their EPS was estimated to come in at a loss of 16 cents, came in at exactly flat at zero. And their revenue was a beat. They were expected to do about 575. They came in at 586 million. The company's reported net loss for the 3-month period that ended September 30th was $900,000, or effectively a break even on per share basis, compared to a loss of about 159 million that we saw in the same time last year. So getting closer to profitability here, but still not profitable. Peloton prepares for its holiday season, which is typically its strongest for the hardware sales. Company is expecting revenue to come in between 640 to 660 million. So again, expectations on Wall Street were higher, but someone's happy here, and it is moving up almost 20%. On the other side of that, you can see Robinhood now down close to 14% here today. So again, it's a stock picker's market. You got Microsoft down close to 6, Meta down 2.5 now again. I have a request from Scott Bauer here to take a look at Mara. Let me do that here. This one, I gotta look at Bitcoin also. My takeaway is that I do think Bitcoin is going to retrace towards, like I said, this 7,400 area, 7,500 area. So I wouldn't want to get in on that until that time as Bitcoin, because it follows Bitcoin. Bitcoin still has some downward movement to it, in my opinion, today. Um, so that would be my takeaway for him. I'll get that back to him. I do like Mara where it's at. I just think that right now, if you look at Mara, I like it more at that 16 and change area than I like it at 17 where it is now. I think it's got a little bit too much um, downside towards that 1668.50 day MA is where I would be sort of looking here. He's trying to rebound. I see some support around 1736. Like I said, I like it more at that 1710, 1711 level there in that range. Let's take one last lick through everything here. Again, tick down 500. Our ADD, advanced decline line, on the 3-minute down 500, on the hourly down 526. VIX back at 2190. QQQ, again, trying to find a bottom here, but not really. 587. Man, I told you, it still has downside. Look at that. So you got to start to think here, does it bounce back at that 485 level that it did here on last Wednesday? Or are we again coming back towards that 50 MA at 581.43? So that's what we're looking at here. Okay, well, I do have a special treat for us here today. I have an interview, like I said, with Dr. Alan Ellman, who is the president and founder of the Blue Collar Investor, a man with 30 years of experience investing in a covered calls. So in buying 100 shares of a stock and then selling covered calls for a premium against those holdings is one of the things that he really likes to do. So let me pull that up here and we will see you back. Today is Thursday. We have Jeremy Vreeland and Matthew Tuttle. We got to get Matthew Tuttle on for an interview here. He's the man behind the T-Rex MSTU. Let me pull that up on the screen. MSTU, which is a ETF that is a 2x long product on MicroStrategy. You guys know how much I like MicroStrategy, a Bitcoin proxy. And this thing has been rocking about $500 million in volume, coming in, or excuse me, and almost $1 billion in money under management there. So the ATF has grown to almost $1 billion. Huge amount there. So kudos to him. He has some other interesting ones he's looking at. So we'll try to get Matthew on in the next week or so to tell us what's going on there. Should be great to see. Let's bring up and transition over here. I'm going to step away and bring on my interview with Dr. Ellman. Good afternoon, Quasar Markets Live. Howard Greenberg here with the president of the Blue Collar Investing Corporation, Dr. Alan Ellman. Doctor, how are we doing today?
Every day is a good day here in Southern Florida.
Well, that's good to hear. That's always good to hear. Your last interview with us last week went over really well. Was very excited with some responses we got, and you are already coming back on to talk and about some questions that came up during last week's show, which was how does your covered call, theory and form of methodology, I should say, more than theory, get affected by earnings reports and the fact that we're in the middle of earnings season. So you put this together for us. So I don't want to take away from you. Why don't you tell me a little bit of what you've put together for us?
Well, in the BCI methodology over the last 30 years or so, I have a whole litany of rules and guidelines as to how to handle this particular strategy. But I do have one rule, okay, and that is to avoid earnings reports.
Right.
And the rationale behind that is we're taking a strategy, covered call writing, and we could say the same for selling cash secured puts, are low risk option selling strategies. They are for investors who have a relatively low risk personal tolerance. Now, if you integrate earnings reports and the risk involved in those into the strategy, now all of a sudden you're changing a low risk into a high risk strategy.
Yeah.
So the one rule in the BCI methodology is to always avoid earnings reports. Now I have various rules and guidelines how to do that, but during earnings season, as you alluded to before, many stocks, ETFs do report. So how do we circumnavigate that issue with so many reporting at the same time, and yet we still need to fill our option selling portfolios? And that is the essence of this presentation.
Great.
Now, you see in this particular slide here, I'm just defining for your viewers who are not familiar with the strategy of covered call writing. So it's basically it's 3 steps. The first step is to buy, or perhaps you already own, a stock or an exchange traded fund in 100 share increments, because for every one contract we sell, in order to be covered or protected, we must first own 100 shares of that underlying security. So that's the term covered in covered call writing.
And I do want to just hit on that again for the viewers. Again, you don't have to start this position because, from scratch. If you already have 100 shares of a position and you're just getting into this, you are able to use those already. So I just want to make sure they understand that.
That is correct. And actually, for those of your viewers who want to use their own shares and do it with covered call writing, there's a very specific way of doing that, because perhaps they've owned these shares for a long period of time at a low cost basis, generating dividends and in non-sheltered accounts. So if that option is exercised and the shares are in fact sold as a result of exercise, there could be some negative capital gains issues they have to deal with. So there's a very specific way of dealing with covered call writing in the scenario that you're alluding to, where they already own the shares. But for traditional covered call writing, the way I do it most of the time, it's a little bit different, because I could care less if my shares are called away.
Right.
As a matter of fact, it's a bonus because I get the money back sooner and I could reinvest it in the same contract cycle and start a second income stream.
Yeah.
But the second word in covered call writing is the type of option we're selling, which is a call option. So in essence, we are selling some unknown person the right, but not the obligation, to purchase our shares from us at a price that we determine, that's known as the strike price, by a date that we determine, that's known as the expiration date. Now, most options expire on Fridays at 4 p.m. Eastern time. Now, the third word in the term covered call writing means that we are initiating or starting a sell to open order. So when you go on your broker platform and you put in options, what do you want to do? I want to sell to open this covered call trade.
Right.
And the third step, buy the stock, sell the option. And then, of course, you go into position management mode to manage your trades if necessary. And then, of course, we get paid very handsomely in the form of an option premium once we enter our trade.
Absolutely.
Okay, so the next slide is, what is earnings season? Well, that's the period when most publicly traded companies produce these quarterly earnings reports. And like you said, Howard, we're in the midst of it right now. And this particular week, we have a lot of the large cap tech companies reporting, and that could create some volatility in the market, depending on whether there are beats or misses or whatever. And that's what I was talking about before, the volatility and risk created with an earnings report. And typically it starts 2 weeks after the end of a quarter. So you see the 4 months I put down on the slide of January, April, July, and here we are in October. And typically it'll last about 6 weeks. You'll see kind of NVIDIA closing things out for the large tech companies 3 weeks into November. And the analysts that follow these various companies, they have consensus estimates regarding sales and earnings. And the consensus is kind of you add them all up and you're averaging them together, and they'll say something like, we expect earnings to be $1.25 a share or whatever. And then if it actually reports lower than that, well, that's a miss, and
Right.
it could cause the price to go down substantially, and vice versa for a beat, then it can go up. So therein lies the volatility
Right.
of earnings days.
Yeah, I mean, Tesla just went up 20% on their earnings report the other day. And in the
Right.
same thing, we saw ASML get hit for, almost that same to the downside.
And last week, Netflix.
Yeah. Yeah,
So yeah,
earnings have definitely been explosive lately. So it would make sense. And I love the way you put this together, because it sounds, I think, and when you first said it to me, it sounded more difficult than once I start to see your slides and the methodology. And what you realize is that, when earnings are coming. So it's not like you're getting, you had to wait to today to get prepared for Ford's earnings tonight. You've been
you
putting
hit the
this into
nail on the head,
place.
Howard. We know the date.
Right.
And if we know the date, we can easily avoid it. Now, I have seen many presentations where they actually encourage investors to invest through earnings. And the rationale behind that is because of the higher implied volatility in that underlying security, the option premiums will be much greater.
Right.
And so it's enticing to sell an option when the premiums are much greater. However, you also have to factor in the risk to the downside. So
Sure.
there's actually two sides, two reasons why you shouldn't be doing this. If you already own a stock and you want to keep that stock, I'm not telling you get rid of it until after earnings. No, I'm not saying that. What I am saying is if you own the stock, like portfolio overwriting, and you want to write covered calls on it, just skip the week of
Right.
the earnings. And
Yeah, it's
here's
not,
why.
you're not saying that you have to miss that entire 6 week session. What you're saying is that last 6 weeks usually earnings every 4 times a year. But as long as you avoid that 1 week when you're writing it, that then you're taking care of yourself. You're protecting yourself from getting that volatility play the same week that you have expiration, where it would be more likely that your shares might be assigned or taken away.
Well, exactly. And, so people will sometimes say, well, if you write the covered call and there's a miss, at least you got the premium from the covered call. I understand that rationale. However, the statistics over the last 5 to 10 years are that there are about 70% beats to 30% misses. So if you write a covered call on a stock you already own, right? And it goes through an earnings report. You put the call in, you're going to lose all that appreciation as a result of that share value increasing as a result of the beat,
Right.
right? So you're in the 70% category if you don't, because then you'll be able to take advantage of that appreciation. And then when the report passes, you double down and then you write the call and generate even more premium, even though it'll be lower than it would have been before the report, but you're still getting another income stream.
Absolutely. And it's already given you its bias.
Right. So if you do not write the call, that will benefit you. I haven't done a deep study on this, but I'm giving you a general idea. That will give you about a 70% advantage probability of throwing it in your favor. Whereas if you do write the call for a miss, figuring what if it misses, then you're in that 30% category.
Right.
So, it's
It's
rhetorical.
funny how analysts still get paid. I wish I only had to be right 30% of the time.
Yeah. So now, okay. So I just want to show you in these last couple of slides what we provide to our members. And even if you're not a member of BCI, whatever screening process you use, you should factor in the earnings report dates. Now you'll see those, Howard. It's the fourth column from the right.
Yep.
Some of them are in red bold. When you see red bold, that means the earnings dates were actually confirmed by the company. So we provide those dates to our members. So if you're a member, you get the watch list, you don't have to screen. If you're not a member and you have your own screening process, be sure to incorporate earnings dates into the report.
Sure.
Now you can see what we have here, that thick black line will separate separates the securities that report the first week of a monthly contract or that particular week. So when that week passes, they become eligible. So
Right.
it doesn't mean you have to miss a whole month. They become eligible.
Sure.
And then the securities in the white cells, where you see the broken red arrow, those are securities that don't report in the October contract month, which is the one that were the November contract month
Contracts,
that
right.
we're in now. So yeah, those are eligible for the November contract. And then once the week of the report passes, then you can boom go right back in and write weeklies if they have them, or go back to monthlies after that. So there are securities. I mean, it's a little more challenging to fill up a robust portfolio, but it's doable.
Absolutely. Absolutely. I mean, there's, yeah. Your watch list or, has a big enough, abundance of options of choices, I should say, of stocks to look at all times that there's always ones in play. So that's what's important. And we've also talked about sometimes no trade is the trade. So, it's taking a step back during earnings and making sure if you normally carry X amount, let's say you normally carry 10 trades, if on any given week you're down to 8, that's not necessarily a bad thing. It gives you a little bit of ammunition to reload and get back in, and it also allows for you to pick just the winners.
Yeah, that's a good point. But I've found over the 30 years of trading covered calls that almost all the time I could fill up a portfolio.
Yeah.
And the next slide, I'll address this slide in a moment, but in the next slide, I'll show you what makes it really easy. But this particular slide, where you see the red arrows, indicates which of the securities that have passed the rigorous screening process, which is on the blue bar at the top, are eligible, and then the ones that have weekly options affiliated with them. So the week of the earnings date, skip it, and then you can come back and write weeklies after that.
Sure.
Now, the screening process on the blue bar, we don't have to go into detail on that, but I'll just say this. It involves fundamental analysis, sales and earnings growth. It involves technical analysis, identifying trend and momentum, and then common sense principles like minimum trading volume, diversification, cash allocation. So it's a pretty rigorous screening process. And then we have the list, and then we let you know when the earnings dates are coming, plus a lot of other information. And then you can avoid the risk of the earnings dates very easily by using our reports or creating one of your own that has that column in it.
Yeah. And that's a huge advantage to your subscribers, because I can tell you from someone who sets up screeners all the time and doing things, trying to put together the combination that you have of both fundamental, also earnings, also technicals, all involved in a watch list, and looking at diversification into different industries and everything there. That's a tremendous help to a lot of investors. So even before you get into the process of the covered calls, just getting this screener is huge for a lot of investors.
Yeah, and the fact that it creates a watch list. Typically, there's 40 to 60 stocks eligible, but during earnings season, you might only see 10 to 15. Right. But in the next slide, I'll show you something that'll make it easy. Here we go. Exchange traded funds, Howard, as you know, do not have earnings reports.
Yeah,
and
absolutely.
So in this particular screenshot here, this is a recent ETF report. We provide those to our members midweek, and the stock report comes out on the weekends. But at the top of the list, we have ETFs. They have to have a minimum trading volume of 250,000 shares per day on average, relative strength ratings of 60 or better, non-leveraged. I don't believe in using the leveraged securities with covered call writing. And these are securities that have outperformed the S&P 500 in 2 time frames, both 1 month and 3 month time frames. So any ETF that has passed our screens, you don't have to worry about earnings reports because they don't have them.
That's right.
And in the middle section, that relates to maybe another time we could talk about the CEO strategy that I created a blueprint for streamlined approach for covered call writing that sometimes members will say to me, "Hey, Alan, I'm raising 3 kids, I'm working 2 jobs, I like to golf on the weekends. Is there a way I could do this that's a little more time efficient?" Um, so I spent about 3 years trying to figure out this blueprint, and then in 2022, Howard, it clicked, and I figured this out. I call it the CEO strategy. It's combining exchange traded funds with stock options. We only look at the 11 select sector SPDR ETFs that break up the S&P 500 into 11 different sectors. And what I did was, for that entire year, I took a screenshot of every trade that I made using the rules and guidelines that's in my book of this strategy. And then at the end of the year, it shows how I beat the S&P by over 15%.
Wow.
So it's a great way to dip your toes in the water if you're really busy, whatever it is, and you still want to generate cash flow. It will be lower returns than traditional, the way I do it.
Right.
But that's that middle section of the report is for the CEO. And the bottom section there is our inverse ETFs. So those are securities that go up when certain market benchmarks go down.
Yeah.
2008, you could have made a ton of dough using these inverse ETFs, but you most of the time you don't use them.
Now might be an interesting time. Steve and many others calling for a 10 to 20% pullback here in the markets over the upcoming months. So we'll see what happens there. The problem that everybody has is that with earnings right now, you could see a 10 or 15% run up before you see that pullback.
Well, I'm not quite as I'm not in that category right now. I'm pretty bullish. Looking at the interest rate cuts that are coming up, as long as our economy keeps on improving, I'm feeling a little bit more bullish. But one of the great things, Howard, and I'm glad you brought this up, about covered call writing, it's different than long-term buy and hold portfolios. You're reevaluating your bullish or bearish assumptions every week or every month, depending on if you're doing weekly or monthly contracts. I never go out further than a month.
Yeah.
There's several reasons why I don't, but I don't. So if I'm doing weeklies, every week I reevaluate.
Sure.
With that stock, with the overall market, am I going to take a bullish approach to covered call writing and go out of the money? Am I going to take a more defensive approach and go in the money where the intrinsic value component of the premium will give me more protection to the downside? And so that if the market starts turning down, it's not going to happen in one day. It'll happen over time.
Sure.
And you could craft your portfolios based on what's happening at that point in time.
Absolutely. You got to play the market in front of you. People that are if you're too perma bullish or too perma bearish, you tend to have problems. You want to make sure that you're playing the market in front of you. It's a rapidly moving market these days. And it's going to be interesting to see what happens, because as I was talking with Stephen Flanagan, who used to be with JP Morgan's FX division for 30 years, what we were talking about is the change in algorithmic trading has a lot to do with also the way cycles work now and the way bullish sentiment, because there isn't necessarily sentiment involved in that they're using formulas. So if a stock goes up X amount, they recalculate, they recalibrate, and they have to analyze and reset and allocate their funds so that you tend to have a different play than what you used to see. So it's going to be interesting to see, because a lot of metrics show us as, severely overbought. You got a lot of people from the Bill Ackermans to Stanley Druckenmiller to Paul Tudor Jones to Warren Buffett, who are holding huge amounts of cash on the sideline. What we've been talking about on our shows too is that you got to realize, you got to poke your head up above those clouds and take a little bit of a bigger picture and say, well, if you're a European hedge fund, where are you putting your money right now? Are you putting it in Europe where they have anemic growth at best? Or are you maybe putting your money in US dollar and then therefore US equities, and that's going to continue to prop up this market, whereas maybe some of these folks aren't seeing that. So it is going to be interesting to see how that goes. I am going to try to get a roundtable, and then after the election, of a lot of our contributors, because everybody has a different view, and we want to see after the election, I think, how everybody's sort of macro view looks going into the end of the year and into the beginning of next year. So we'll definitely get you in on that panel for sure.
Sounds good. And very well stated, by the way. Appreciate that.
Okay, now we're looking at your blue chip Dow 30 report.
Yeah, blue chip is really, yeah, the Dow 30 report. Some of our members only want to deal with these blue chip type companies. So as a response to that, created this monthly report. You know, the stock report and the ETF report come out every week. This comes out the week of monthly contract expiration for the following monthly contract. And what we do is we chart the Dow 30 stocks, and in order to be eligible for this report, they have to have outperformed the S&P in both 1 and 3 month timeframes.
Okay.
And then we give additional data, and the red arrow shows what we're talking about now is the earnings report. And these have weekly options associated with them. So you can also turn to the blue chip report for additional securities that will allow you to beat earnings. And you can add that to the entire ETF report. And then you can add that to the stock report, the securities in the white cells, and then the ones after they weekly passes, then you can jump on board with those. So the point here, Howard, is that, you know, there's not always a great solution to funding large portfolios during earnings season, but there's always a best solution. And
Absolutely.
as I said, in 30 years, Howard, very rarely have I had a difficult time funding my portfolios for
That's
coverage.
great to hear. My takeaway is that I keep coming out of this. We've only had this is our second interview, but I'm amazed at how much you have fine tuned your methodologies for all the different levels of risk, time frame, almost everything that a different investor might be looking at for it. And like you said right here, is there are people, you're right. Like, my father is one of them. I only want to do it if it's a company I know, which Peter Lynch, hey, listen, one of the best investors of all time said, right, invest in what you know. So that's how my dad always felt. And, I love that you have put that already into play within your methodology, and they don't have to break it out. In other words, a lot of different services will hand you a piece of paper. It's got 150 and it says, now you determine from here. You guys have really gone that extra step and said, okay, if you're only looking for the blue chips, if you're only looking for X, Y, or Z, if your risk level is a little bit, these are the things that you do to trade and still use your methodology. I think that's amazing.
You know, years ago, you're making me think back a little bit now, Howard. Years ago, before the blue collar investor became an actual company, I think I told you last time I was a dentist,
Yep.
and the way I used to do my screening was my wife and I would sit down at the kitchen table on Saturday morning, and we'd have two computers, and we would do the screening that you see here,
Yep.
and and it did take a lot of time. So producing these reports for our members saves them a huge amount of time, but it also gives them the opportunity to select securities that aligns with their personal risk tolerance. Also, let's face it, cash available.
Yeah.
I mean,
It's huge
you know,
different on this page right here. Cisco $54 is a lot different to do a covered call with than it is at Caterpillar at $392.
exactly. And if you go back to the ETF report, there are a lot of ETFs that are lower priced as well. And so, for people that have limited cash available, they might
Yeah.
want to turn to the ETFs. You could see, I can't read it that well on this screen here, but
Yeah, but you're down,
uh,
right. You have them down in the 31 level, 26 level, 31 level, 17 for the
right.
MSCI. So they run the gamut, and again, all the way up to 138. Now that makes sense too. And most of or not all of these ETFs for sure are going to have great volume in the options, which is going to lead into what our future discussions will be when it gets into spread on options that you have to worry about sometimes, and
Well, all of the
premiums.
yeah, all of the ETFs that make our report have at least 100 contracts of open interest and or a bid-ask spread of 30 cents or less. So liquidity is factored in to the report.
That's what I mean. You guys really, it makes sense after 30 years that you guys have gotten to this point. But I'm so impressed because I haven't dealt with any other service, and I worked for not a competitor of yours, a different style of service, as you know, with Prosper, and they didn't have it built down and drilled down this level. These were things that our educators would do on like you're saying, on a Saturday morning. I would sit down and go through my lists and have to do this, not have a starting point. So I can tell you how much time this saves your
Yeah,
investors.
absolutely. This screen just summarizes what we talked about today, Howard. I believe, and not everybody believes this, but I strongly believe that earnings reports should be avoided because we're doing a low risk conservative strategy covered call writing. It applies also to cash secured puts, similar low risk strategy. Now, the reason why some investors do like earnings is because the premiums are much higher, generally speaking, because of the higher implied volatility leading up to earnings, and then you have the volatility crush afterwards. It just drops down.
Sure.
Now, if you want to own the shares, we talked about this through the earnings report. Perhaps you've owned these shares a long time. You're writing covered calls, portfolio overwriting, but the earnings report is coming up. Just let it go. Let it ride through the report. Hopefully, you'll get a beat and it'll go way up. But even if you get a miss, you haven't risked the possibility of missing that appreciation.
Right.
And, the possibility that in order to retain the shares, now you got to pay the intrinsic value that the stock has gone up to keep those shares. It could cost you a fortune. So don't let the report pass, see what happens, let the volatility subside a little bit. Now, boom, you go back into the game with covered calls after that.
Yep.
Now, use securities that aren't reporting in that particular cycle, weekly options that we talked about to circumnavigate reports, and of course, any exchange traded fund that passes our series of screens are good.
A couple of things that I want to just touch on that you said there. One of them was huge, is that in my opinion, is you have a thesis. Your thesis is on how to lower risk, but still make a good earnings and outperform sort of the benchmarks with your style versus someone that just buys the S&P. That is exactly what your program does. So, right, do not get enticed by those high premiums. It's like the fancy, flashy slot machines next to the door at the casino that they always say have the worst odds. There's a reason they're offering you those high premiums. There's a reason that they're there because, like you said, you might lose half of what your gain could have been there because your shares get taken away, get exercised during this type of thing. And you might have, if you're not in a retirement account or a tax deferred account, you're in a situation there also where you could have a tax implication from it that you weren't counting on. So I love the idea of having a thesis and trading with that thesis. I will say you've brought up about 7 other interviews for us to do already that I've written notes here on based upon things that I've seen in these reports or have questions about, or what you've brought up, today about how, using just ETFs or sectors. I want to ask, because I am a big fan of sectors when it comes especially to cyclical trades. I think that they are sometimes, it's almost like people don't see the, in front of themselves is, a beaten down market. Like maybe today where oil, got beaten down is, the time to look at that sector for some of these sector moves for those that are looking at more of a long-term, portfolio outlook. A lot of times what we talk about on the show is really the day traders. So this is, great information for those people that are looking for their retirement accounts, for their 401ks, and for, but it isn't, because the way that you do this with even weekly selling of options, it's bringing revenue in on a weekly basis.
It helped pay for my son's college and then professional school educations. I bought my first real estate investment property with the cash that I generated from selling options. I mean, it made a huge difference in my life. Now, just so your viewers know, I mean, we've talked about this everything sounds great, almost like it's a panacea here, but there is risk. I mean, it's
Absolutely.
low risk, but there's risk. And, that's why in the BCI methodology, we created all these rules and guidelines to help avoid the risk and minimize the risk. And that's why, if I could use a baseball analogy, I'm not sure if I used it last time, Howard, but you'll probably hear me use it again and again and again. We're never going to hit a grand slam home run with covered call writing, but we're going to hit singles and doubles all day long. And once you do that, you have to learn how to manage a trade.
Yeah. Hey, Wade Boggs made a lot of money hitting for average.
Yeah, exactly right. And once you enter the trade, you don't like curl up into the fetal position and hope for the best. You go into management mode, and there's so much so much you could do to mitigate losses, turn losses into gains, or enhance gains even to higher levels. My eighth book was Exit Strategies for Covered Call Writing and Selling Cash Secured Puts. It's 27 chapters of exit strategy
Wow.
information. Now, it's
Wow.
not rocket science. Everybody can learn it, but if you don't know that those opportunities exist, you're not going to do it. But if it's out there in black and white for you to read and understand, and then I even give guidelines as to how to tell when to buy back the option if an opportunity is coming along. So it's intimidating for beginner investors, because it seems like so much, how am I ever going to learn this? But I use the analogy also. It's like driving a car. You're scared to death the first time you're on a highway, and then after that, you just go.
Right. Absolutely. And that's what it is. I can tell you is again, what's nice is sometimes because I am a fairly new trader. I only got into this in 2013 and on the crypto side, only really got into the stock trading side in a big way during COVID. Is that yeah, it is intimidating. But what I love about your program and what I've seen is that you guys really do bring so much to the table that takes a lot of that scariness away. Am I going to pick the right stock to start off with before I even start figuring out the covered call part of it? And you've got all of these components sort of built out for people, and it allows for an easy acclimation. And I'd have to guess that your learning curve with your students is a lot quicker than in a lot of different programs out there because of that. The fact that you have this methodology built up over 30 years.
Yeah, that's true. I mean, it probably took me a few years to get all this figured out because I took all the information that was out there in the mid 90s. I looked at it and then I started over. And I
Yeah.
started creating my own rules and guidelines, algorithms, spreadsheets, et cetera, et cetera. And I thought I'd be doing root canals and crowns all my. What did I know? But once this happened and people were interested in what I had to say, then I started sharing everything that I've learned. So to your point, and we've dealt with thousands of beginning options traders over the years from all over the world, not just the United States. 3 to 4 months doing your due diligence, learning the methodology, paper trading for a month or two. So a total of 3 to 4 months. And then you're ready to get started in a conservative way. Don't start with all your money
Right.
right away. Start with a little bit of it, dip your toes in the water, and then you'll have years and decades to benefit from these strategies.
Absolutely. I'm actually writing another note because I'm going to sort of put there is that's one that I know that we did very well at Prosper Trading Academy that I haven't seen a lot of people use, which was allocation of portfolios and telling people, don't follow any signal that we give you or any trade that you should do needs to be weighted in a way that also protects your portfolio. You have to, if you don't preserve your income, you never can grow your income. So making sure that people have the right sort of setup there is one for us to talk about in a future day because I think that's so important. You get so many people that join these courses, they get too excited because they hear testimonials from other people and they start to get excited and they go in and they say, okay, I got $10,000. They put it all into their first trade. And that, we want to make sure people don't do that, that they're following a good methodology for doing that. I'm sure you've run across that over the years.
Oh, when I do my live seminars, one of the biggest problems I have is just what you're talking about, Howard. People get so excited if it's on a Saturday, they want to start on Monday.
Yeah.
They said, I understand everything you said. It was a really good seminar, this, that, and the other thing. I'm going to start trading on Monday. I said, you're not ready. You're not ready.
Yeah, they don't, because it is the pressure that comes once you hit that button and you own something. They don't understand that because there's going to be the ups and downs that are going to hit, especially with the option part. Those premiums are going to move pretty quickly on people and they start to get nervous. So that's, that is one thing that I always try to stress with all of our educators and contributors here on Quasar Markets is that everybody is teaching the proper portfolio management, and it's not an all-in-one bucket and all-in-one trade thing that doesn't work. That's how most traders actually burn out and crash, unfortunately. That's always been what I've seen is, the huge amount of percentage of traders that actually do burn out and crash, so to speak, lose everything they start with. And I see most of those are because of over allocation of funds into one trade. Yeah, and then the other thing we always teach people, there's no such thing as doubling down. You can cost average a stock, in the right circumstance, but never use that terminology double down because it gets you into a gambler's philosophy, and that's not what you're doing with your money, we hope.
Yeah, you actually, I know this is way beyond the scope of this particular discussion, but you can actually use call options to lower your break-even price
Right.
points.
Oh yeah,
Stock.
absolutely. We went over that a little bit last time. We'll go over that more. Absolutely. We're not saying you're stuck with it. You bought it, you're stuck with it. In fact, you just said you have 27 chapters of how you exit that trade based upon variables that could come with going up and going down and everything that comes along with it. That definitely is the case too. But I just always find that people get so excited that they get too excited, and then they get a negative connotation because they don't really know the whole program, and they go in with not enough knowledge, and then they panic before they ask enough questions and learn, and they get down on a program or down on themselves.
Yeah, yeah. They've gone all these years not using covered calls. Wait another 3 or 4 months.
Yeah, exactly. That is the greatest thing. You've hit on one of the big ones. Stephen Flanagan hit me with a good one at the end, so we're going to end on that one. But he told me, Jack be nimble, Jack be quick. Just Jack, don't get stuck on top of that end candlestick. And I was like, that's a good one too for trading. So, Alan, thank you so much for joining us today. Can't wait to see you next Monday. And thank you for your time.
Always my pleasure, Howard. Take care.